right. Everybody's coming in. Just want to welcome Tony Craig, John Baker, and Greg Deal. Thank you so much for your time today, and Happy New Year. It's a great year. I'm very excited for this year, and thank you so much for your time and your partnership.
Thank you. Glad we can do it.
You're welcome.
Yeah. So we'll go ahead and get started. I do see a few people that are trying to come in now, but I'll just kind of give a really quick overview as to SoCal CCIM. So I think everyone's able to see my screen, correct? New laws, new opportunities, and new beginnings. And so Happy New Year to everyone. Thank you so much for attending our SoCal CCIM event, first event of the year. We think this is very timely because 2020 was a heck of a year. And 2021 is, starting off very interesting as well. And so starting off 2021, there's usually new laws, new opportunities, and it's an opportunity for new beginnings as well. And so again, thank you everyone for participating and for joining in. I just want to do a really quick highlight on CCIM. Mission statement of CCIM is to elevate our members to the highest levels of success in the commercial real estate profession. And everything that we do with the webinars and everything that we try to do is really focused and specific for that. And so we encourage everyone to follow us on the social media sites. One thing to take a look at if you're looking for a recording of this, along with any other things that we've done in the past, please visit our SoCal CCIM YouTube channel, where you'll get an opportunity to review this along with everything else that we've done. And so, thank you everyone that's helped put that together. Also want to give recognition, to our board members, and you'll see there's been a little bit of change. And so our president for 2021 that we're going to go ahead and welcome, in a couple of weeks is Eric Frickel. As president of our SoCal CCIM chapter, with our vice president being Bonnie Brown, and then all the officers down below. So again, everyone, thank you so much for your time and for everything that you do. Also want to give recognition to our sponsors. There's no way we could do the things that we do at the cost that we do it at without our sponsors. And so, Small Business Finance, CoStar LoopNet, AIR CRE, one of our newest sponsors, Allied Commercial Real Estate, Ashwell Associates, Asset Preservation, Baker Law Group, Coast to Coast Escrow Services, Platinum Wealth Group, Fidelity Bancorp Funding, Digsy, and Incentex, also a new sponsor. And so, everyone, thank you so much for your time and for and helping us with our chapter. And if anyone has any questions, all our sponsors are open for business, and I'd love to hear from you as well. So please go ahead and give them a call. And so, with that, we got a lot of things to go over, and we want to get some information out there as quickly as we can. And we know there's a lot of things that are happening at this time in everyone's business. And so why don't we go ahead and get started? I want to introduce our panel. We have Mr. John Baker, Baker Law Group. We have Greg Deal with Union Bank, along with Tony Craig, Farmers and Merchants Bank. And so each of them are going to do a self-introduction when it comes time for them to talk. We want to try to make this as engaging as we potentially can, for the participants that are here. And so what we want to do is, if you do have a question, there should be a Q&A box that's available and open to you. So please go ahead and ask any questions that you have. Again, this presentation is specific for our members and everyone that's attending this event. So we want to make sure, if you have a question, please go ahead and ask, because we're all here to benefit everyone that's part of this call. And so with that, why don't we go ahead and start off with John Baker, just kind of give us a quick update as to what's happening in round 2 CARES Act. And you have a couple of slides that you'd like to share, and then we'll go into Tony Craig along with Greg Deal. So John, why don't you go ahead and start off with this?
Great, I appreciate you having me on. As most of you know, I'm a real estate attorney here in Southern California, and there's a couple of things that I focus on. One is liens. So if there's an easement or a lien or something like that, a judgment lien in the way, please give me a call. John Baker, Baker Law Group, I can help you with that. Today I wanted to talk about the new economic COVID-19 relief package. So I'm sure most of you have already read all 5,600 pages of it and summarized it and are completely familiar with it. I certainly wasn't until I started looking at this. Okay. just a sec here as I'm doing my own tech stuff. All right. So we're going to talk about the economic relief bill in a minute. But first of all, I thought you might also be curious about when you might be able to get the vaccine. And for a long time, at least that I've been looking, there was no real, I found nothing for California on when that was going to, how that was going to play out. So what I found out was, as you all know, Phase 1A is for the healthcare people and for long-term residents, like in nursing homes or something like that. But after them, what happens? And so the next thing is that individuals over 75 can get a vaccine, as well as essential workers in certain areas. As you can see, the education, emergency services, and things like that. What follows after that? Well, it's 1B Tier 2. And that's individuals 65 to 74, as well as other essential workers in some of the other areas, which I guess somebody decided were less critical than the first group, and also congregate settings. So that could be jails, prisons, and as well as homeless centers. Following that one, we have 1C, which is people a little bit younger, 50 to 64, and also individuals who have underlying health condition, as well as, again, some other essential workers in other areas. And then after that, well, that's what Dr. Fauci called open season. So that's when everybody else can get a vaccine after phase 1C. By the way, Gary, let me ask you to help me. If you see any questions in the chat box, would you let me know, because I can't pay attention to that and also do the talking here.
No worries, I'm on it. So go ahead and do your thing. That's fine.
Appreciate it. So let's talk about the Consolidated Appropriations Act of 2020, otherwise known as the Economic Relief Bill. It's $900 billion for COVID relief. And just wrap your head around $900 billion, or try wrapping your head around $1.4 trillion for government funding. It took about 8 months of negotiations. It's almost 5,600 pages long, longest bill that's ever been passed by Congress. I'm sure every single one of the congressmen and senators read it thoroughly and fully understood what they were voting for. However, there were zero additional funds for state and local aid. That was one of the issues that they couldn't get past, and so they just left it behind for a later time. Probably all wondering when you're going to get a check or if you're going to check. And the stimulus checks are $600 for individuals, making up to $75,000 per year, and that's based on your 2019 tax return. Or it's $1,200 for couples up to $150,000. And if you have dependents under 17, then you get an extra $600 for each of them. If you're making more than $75,000, then your payments are going to be reduced by 5%. However, if you're making more than $87,000 for an individual, or more than $174,000 for a couple, you're not going to get any check at all. This bill also expanded unemployment benefits to $300 per week for all the workers, as well as extending it for another from 13 weeks to 24 weeks. But note that it's going to end pretty quickly in April 5, 2021. So it'll be interesting to see what Congress is going to do, or how it believes that unemployed workers should be handled or benefited come March, or when the deadline starts to come close. There's also provisions for a second round of PPP loans, and I think we're going to be talking about this a lot more. So this could be either your first PPP loan or your second PPP loan. There's some new provisions, though. You have to have less than 300 employees, and you have to demonstrate that you've had a 25% reduction in revenue. So I've heard some people that I've seen on Zoom meetings are saying that this is their best year ever. So they're probably not going to be able to get one. Another thing that they do is that cleared up something. There was a question as to whether the expenses that you paid with your PPP loan proceeds could then be deducted from your tax on your tax return. And the theory was, well, since the PPP loan was perhaps forgivable, or at least was a loan, then it really wasn't an expense to you. But that's been cleared up, and now you can take that as an expense. I just wanted to throw this one in. This package, this huge package, also included $15 billion for live revenues, independent movie theaters, and cultural institutions. So that's a lot of money to spread around, it seems. It also increases the monthly SNAP benefit level. We used to call them food stamps, by 15% for the next 5 months or so. But it also gave about $5 billion for supplemental $20 per acre payments to all the row crop producers. So to give you an idea what that means, if you had 2 square city blocks, which is about a quarter of a mile each, that's 160 acres, and that would come to another $3,200 for that small area. And most farmers have a lot more than 160 acres to farm. So especially if they're doing row crop. On the other hand, the food benefits are going to go up 50%, and that's like $29 for a single person, and I can't remember, but something like $100 for a family of 4. U.S. Postal Service also came out pretty well. They got $10 billion in direct funding. As you may know, the USPS is no longer a governmental agency. It's a separate corporation, and sometimes they need more money that they get from Congress, but this time they don't have to pay it back. It's going to be $10 billion gift to them, and supposedly that'll be used for their operational costs resulting from the pandemic. There's also going to be rental assistance and eviction issues in this. So the bill provides for $25 billion in emergency rental assistance. That is going to be distributed to the state and government, and who is going to then pass it down to the local level and be used where appropriate. So you may be wondering, well, who's going to get it? Can I get it? And so probably not. So the eligible householders have to meet all 3 criteria. They have to have a household income of not more than 80% of the area median income, and that's a census or a treasury measure. They have to have at least 1 household member at risk of homelessness, and they have to have 1 household member who either qualifies for unemployment or experienced hardship from the pandemic. And the bill also extended a CDC eviction moratorium, and I wasn't really aware of this, but back in September, the CDC order prohibited a landlord from evicting a tenant for non-payment of rent, and this was a national order. However, well, let me just say first that the reason, the authority that the CDC had for this was that many evicted renters move into close quarters, either with friends or with families, and that could potentially increase household crowding, which could increase more positive COVID-19. In fact, they found out, or the CDC cited this statistic, that you're 6 times more likely to get infected from somebody in your quarters than from elsewhere. But not to worry here in California, because the CDC order doesn't apply to us. And how do I know that? Because on September 2nd, Governor Newsom said that the new CDC eviction moratorium does not apply here in California. In fact, this is what he said: our protections are not impacted by these federal rules. Our protections go a little bit farther than the federal government. So that means that all we need to be concerned about is the COVID-19 Rental Act of 2020, which I talked about last year, and has a lot of restrictions on how and when you can evict somebody. And with that, I'm going to leave it right there and let the rest of the panelists join in. But if there's any questions, just let me know.
Yeah, thank you, John. Thank you for that. It's a lot of information that was certainly shared, and everyone, please take note of John's information there, and maybe you could throw it in the chat as well, or it's on your screen. And so with that, thank you so much, John. And again, I just want to encourage any participants, if you do have any particular questions, go ahead and use the Q&A box. Or even if you want to throw up your hand, we could bring you in live to ask your question live as well. And so, John, thank you for that. So let's go to Tony Craig. Tony, if you don't mind, let's do an introduction to yourself. And I mean, there's a lot of questions regarding everything that we just heard. Particularly, I'm thinking you probably get a lot of questions regarding PPP. But maybe self-introduction and tell us a little bit more about your experience and kind of what you're seeing out there from folks.
Yeah, thanks, Gary. Tony Craig with Farmers and Merchants Bank. F&M has been around since 1907. We're a family-owned and ran bank. Our general area is basically what I call Greater Southern California area. So Santa Barbara County to San Diego County, inland to San Bernardino and Riverside. And what I specifically do is conventional lending for commercial real estate. So yeah, Gary, with respect to PPP, John hit on a lot of the topics from what's going to change from the first round, which technically there is still some money available for the first round. The differences between round 2 and round 1 is, like I said, John indicated on a couple of them. Some others are anybody that has a Nixus code that begins with 72. Think of your restaurants and those folks. They get an increase of 3.5 times their monthly payroll, where everybody else gets 2.5 times, and that's what it also was in round 1. So that's one of the biggies. Another biggie is max loan amount was at 10 million. It's now down to 2 million, unless you are, for some reason, one of those companies that didn't apply for round 1, and you still would be applicable to that. If you can get approved under round 1 without a previous PPP loan, you're obviously not limited to that $2 million limitation. You can still get the 10 million. And the other thing, no public companies are eligible for this second round of PPP money. So that's some of the big things that I know our clients have been asking about with respect to the PPP. We expect to go live with applications probably early next week, I would suspect. We did about 700 million the first round, so we were very, very active with it the first round, and I suspect that many of our first round clients will be applicable for the second round. I'm already starting to look at quarter-over-quarter numbers with my clients to make sure that they meet the 25% reduction in revenue requirement. That's going to be the biggie. We probably have all heard of a lot of companies out there that have flourished in 2020. However, back in March and April, they had no clue as to how 2020 was going to be for them. So those folks, they're out for round 2 PPP. So that's really kind of my biggest duty right now this week and going into next week until our application goes live is everybody from round 1. We're looking at their quarter-over-quarter numbers to make sure that they have that reduction. And those quarter-over-quarter numbers is 2019 Q2, for example, against 2020 Q2. It can be any quarter in the year, but it has to be the same quarter. So Q2 versus Q2, Q4 versus Q4.
Thank you, Tony. That's really good information. We're going to kick it over to Greg Dill really quick. Just if you have anything to add to the PPP, but also I have a question because I know the first round, I know there's a lot of businesses that were very interested in the SBA debt relief program. And that's something that I haven't heard a whole lot about, so I'm not Is that something that's still available? Is that successful? Greg, can you talk a little bit about that along with chiming in on anything else regarding PPP and self-introduction before all that, if you don't mind?
Sure. Thank you, Gary. Pleasure to be here with everyone. My name is Greg Dill. I'm the SBA lender. I serve as an advisor for business owners, and I provide guidance and expertise on their commercial real estate and business acquisition financing needs, and is typically through these low down payment programs like SBA. Most of the people on the call here are probably familiar with SBA. I always like to say that it's like FHA, but for business owners. So when you are dealing with clients, you can explain to them that it's a low down payment program that they can get into buildings or get buy out their partners, buy out their new businesses. So I just focus hand in hand with clients from the beginning all the way through their close, and then afterward maintain a relationship with them to help them out through the life of the financing. As far as these programs are concerned, I want to start out with saying we're awaiting final guidelines on everything. Initially, the SBA had until January 6th to begin implementing the regulations on many of these aspects. That was yesterday. We all know what happened yesterday, so I'm sure that this isn't all set in stone yet. If everyone recalls, initially with the PPP program, it was going to be a 4% interest rate. Then they reduced it down to 1% after all the regulations were enacted. So I think a good caveat is to say that things will change. They changed in the beginning rounds initially, and they'll continue to change here. Got a pretty good overview of those PPP. So I'll go more into what Gary was speaking of, the SBA debt relief program. Also because oddly enough, for most of the lenders involved, people that are focused on the SBA and especially on the real estate, they basically did not have us do a lot of the PPP program. They deputized other people because it was a very basic way of doing so. They didn't really have to underwrite. So although I'm versed in the PPP, I didn't actually conduct any of those myself. So what I did was speak with clients, hand them off to people within either my bank or outside of the bank. So what I did focus on was the benefits that are from the SBA debt relief program. So what that was when individuals were getting SBA financings, and like I said before, I focus on the commercial real estate aspect, which most of the people on the call do as well, with the brokers and different property managers. That basically gave 6 months of payments, free payments, to anyone that was able to get financing by the end of September of last year. So basically, anyone from September until now that they weren't able to take advantage of that. There was no cap on that initially. So this is being put back into place. They've allocated, I believe, about $3.5 billion for this. And it's going to be basically covering the principal and interest on all of these small business loans again. So one thing that's going to happen is the individuals that have already obtained financing, whether they got it before that September 30th or in between, which they didn't get to take advantage of it, what we've been hearing is that they're going to get an additional 3 months of payments from beginning in February. So February 2021, so in less than a month here. And there's going to be additional 5 months of payments for existing borrowers and the industries hit by the hardest by the pandemic. And Tony Craig had honed in on a little bit of those. It's arts and entertainment, educational services, accommodation for food services. So there's various NAICS codes that they put in place for those. And then as far as any of these new financings that's coming out, what we've been told is that we should wait for the approvals, if possible, until February 1. If we wait till February 1, that's when it's going to enact and they're going to be able to get those 6 months of payments. What we are not sure about right now, if we were to get an approval and close a transaction, even if we weren't to close right now, but if we were to get an approval within the month of January, even though we closed in February and March, then they apparently they're going to get the 3 months. They're not going to be able to get that 6 months. So that's still some of the things that are getting honed out here. That again is going to cover the principal and interest. Previously, like I said, there wasn't a limit to that. Now there's a cap of $9,000 of forgiveness per month. One other benefit to that is that they're going to be paying all the SBA guarantee fees. So that's about 2.5%. So a lot of clients will say, hey, it's expensive to do SBA. Well, it's a little bit more expensive than if you go the conventional route where it might be 1% for origination, but you're also getting it at 10% down or 90% loan to value. Those costs are going to be eliminated for the SBA portion. So that's definitely a benefit And a big benefit that's going to go under the radar for clients is that the SBA for their certain loan products increase their guarantee from 75% to 90%. That's going to help out the lenders, but in essence, it's going to help out the clients too, because lenders are going to be willing to do even more risky transactions because any losses are going to be guaranteed up to 90% instead of 75%. That's something in certain industries and certain transactions we can take advantage of at any time. So I always like to keep that in the back pocket, but that one right now is going to be a big windfall to clients that may be very borderline and not being able to qualify fully for a building or fully for an acquisition. So this is definitely beneficial to a lot of our clients, previous and past clients, and especially when you brokers are out there talking with clients, you can let them know that they're going to be up to $9,000 a month in payments. That to me is about $1.5 million in financing. Rule of thumb: every $1 million in financing is about $6,000 a month in principal and interest. So very good benefit to them, and that's just going to definitely spur the market and keep transactions going.
Yeah, thanks, Greg. So, okay, so question. All right, so a broker has a client and that's interested in purchasing a property, or should they be talking to their bank? Should I be talking specifically to you? Are there specific folks that that mainly focus on PPP, or banks just not doing it? If a broker needs to give advice to their client, what kind of advice should they be giving them when it comes to the SBA debt relief program and the PPP?
Yeah, I definitely let them know that that this is coming back into play. It's definitely a good choice for them to take this route. Again, if they're in escrow already and you're able to push out a little bit more so they can wait to get the approval, and that's the SBA approval, which most banks are able to pull that automatically, but get the approval starting at the beginning of February. And just that, yeah, they can still take advantage. They're 10% down. They're going to be able to get relief up to 6 months, maybe longer for certain industries. So if they are thinking about buying a building, if they're in between leasing and buying, it's definitely a great opportunity to take advantage of purchasing a building right now. Like they said last time, it's until the funds run out. So they're anticipating it to be being able to go for 6 months. If the funds were to run out sooner, they would obviously not be able to take advantage of that. So the sooner the better for everyone to move forward with that. I'd be definitely happy to speak with any clients. What I do is what I call a full field underwrite. So a lot more stringent than what someone's going to do at a typical bank, where they may put a pre-approval or pre-qualification letter for them. I want to make sure everything cash flows. I'm going to show proof of funds. I'm going to make sure that we run the credit, so we do know that if we're going to get into escrow, it's going to be a client that's going to be able to close. And if it's something I can't do, but another lender can, I'm going to package that up in a pretty bow, hand it off to someone, and be there as a resource to help along the way.
Thank you, Greg. You've been a wonderful resource for myself as well. So thank you for everything that you do. Okay, so one question that I get quite a bit is actually I get calls from brokers, independent contractors, and say, hey, you know what, this is me. I think I fall underneath this bucket. So I assume independent contractors fall under everything that we're talking about as well. That a real estate agent could go out there and apply for their own PPP loan as well. Is that correct?
Yeah, that's correct.
Okay, so so all the brokers that are on this line right here, I mean, if you want to take advantage of the PPP, opportunities that are out there, we encourage you to talk to your banker and talk to a couple of bankers that are here as well. Again, because there's the money's out there, and the way I see it, the government wants us to utilize the funds, so we can put it back into the economy. And so, might as well take advantage of it while the money's there. So
keep in mind, you have to have the 25% reduction.
Yeah, that was the question. So what documentation is required to show that?
Well, so that's the tricky part because, as you know, nobody files quarterly reports as part of your tax return. It's just a snapshot of whatever it looks like on December 31st. So that's really interesting as to how they're going to determine that, because let's say a small company that has 2 or 3 employees and uses QuickBooks, it's easy for them to go back in 2019 and push, some money that came in June to now that money came in July or August, and kind of make those numbers work. But I personally don't know how they're going to be able to tell, other than just your general certifications. And that is something that, like my bank, for example, we have held off on accepting forgiveness applications for loans between 50,000 and 150,000, because we were always kind of expecting that Congress and the SBA were going to potentially change that. So you're not doing a full application for under 150. You're just doing basically a certification. And they have come out and done that. So I suspect that the 25% reduction rule is probably going to be something along those lines of a certification, unless either John or Greg has heard differently.
I have. So in terms of how this is going, at least thus far, is for 150,000 and below, it is going to be the self-certification. For above 150,000, they're going to require some type of financials that they'll have to do. So they'll probably have to put in a P&L for whatever quarter that you're going to be looking at, the year over year quarter. So that's going to be the way that they're going to do that. There's going to be a streamlined, simplified application process for the financings of $150,000 and less, and then the blanket forgiveness for that. Whereas right now it's at 50,000. So for these new financings, it's going to be 150,000. They think they might make that retroactive as well. So they're going to increase there's different provisions. Again, what in certain types of businesses where you have to spend that money, most of it, I believe it's 60% is on payroll. And then there's your mortgage interest payments and rent, utilities. There are going to be new expenses as well for operating expenses, supplier costs, and worker protection expenditures for like PPP equipment, things like that. So that's going to definitely increase the availability. Gary had mentioned for independent contractors previously, what they were basing that on the bottom line, I believe, right, Tony, in the past. So it wasn't that most independent contractors, if they're a 1099, they're not paying themselves a salary. If they are, they can utilize that. If not, they're going to be it's going to be based on their profitability, unless that's going to change as well.
Thank you. And we had a question, are PPP loans going to be forgivable, which the answer is yes. Another question I hear that comes up on top of that, if it's forgivable, are the taxes going to be required to pay, on that forgiveness? And I assume no, and I see Tony saying no, but
Just got clarified.
Okay, great.
Yeah, that's what John had mentioned initially, is that they're not going to require the taxes in these, and then hopefully that's going to be retroactive. So basically, obviously, any of the financings that's already in the process of being forgiven, it's not going to change on that. But one other thing to mention, the EIDL program, they're not going to net out that was up to $10,000. They're, as of right now, they've been netting that out of the PPP financing that people are getting, and then that's how they were documenting that, and that was going to be owed back. Right now, for this new round, they're saying that that's not going to be netted out, so they'll be able to keep that plus the PPP. And I think that was more of a logistical nightmare for banks if they had to, a couple $1 million and then they're netting out 10,000. So
right,
that's actually is retroactive back to round one as well.
Perfect.
Greg, have you heard? So we've had a lot of clients that have got the EIDL grant, which is $1,000 per employee up to a total of 10 grand. So the notification that I've been receiving is for any of my clients, if they've had a PPP loan and the EIDL grant, they were basically just paying off the EIDL grant. So now, so even round one, the EIDL grant is not going to have to be paid back. And the people that did pay it back are going to be made whole. So that's specifically all that they said. Greg, have you heard any further clarification on how they're going to be made whole? I mean, is ultimately the government going to be reimbursing them for the $1,000 to $10,000 that they paid? Do you know?
Yeah, I'm not certain of that. I mean, that one was obviously because of the EIDL. I believe that they were having that over the 30 years of what those financings were given. So if they've had to start paying already, I'm not sure. That's another one that sounds like a logistical nightmare to me. So, hopefully they can figure that out. But it's always, the ones that have already been forgiven and different things are in the process, and they're not going to be able to put a halt on that. And that's why I'm saying to you brokers that if you do have transactions that are closing in late January, early February, see if you can get a couple weeks of extension for your clients, because if they're able to, and they haven't got the actual approval, SBA approval yet, they'll be able to wait on that and save, because if you've already gone through, you've got that time stamp, they're not going to be take advantage of these great government aid.
Yeah, we're exactly in that situation with one of our escrows, and we're pushing it back for that exact same reason. So that's a good heads up there, Greg. John, regarding evictions, for tenants, and so if a tenant's not paying rent, I believe the courts are open up again. Are they hearing cases right now, or are they what's going on with evictions with all of that? And you're on mute, John.
So the course that I'm in, it's all being done virtually. I'm having trouble getting even getting trial dates. Now, unlawful detainers, which is what you use for evictions, they have a preference by statute. So they're likely to go forward before your normal civil lawsuits go through. With regard to evictions, the lawyerly answer is it depends. If you have a commercial tenant who's not paying rent in Hemet or Fullerton, then those two cities, among others, have a local ordinance that says that there is a moratorium on both residential and commercial evictions. And so that's going to trump the COVID, the law that was passed back in September, I think it was, of last year with regard to evictions. By the way, the law that was passed in September with regard to evictions was just residential, didn't look to commercial. However, like I say, if a city has decided that there should be a moratorium on commercial evictions too, that's it. And you can't even collect the 25% of rent that you can with a residential unless the ordinance says otherwise.
Well, it's a lot of interesting stuff here, and again, just want to remind our participants that chat box is open there if you want to have any other questions. And so I think we've certainly had a lot of good information that was provided to us and given to us. And just John, do you have any additional thoughts or closing remarks here? We want to get as much information out as we quickly can to our folks here. And you have any closing thoughts to all this?
It's just be ready to adapt, be nimble, because we don't know where things are going. It doesn't look like the pandemic or the virus is going to let up anytime soon, even though vaccines are on the way. So we just all need to be nimble and ready to pivot whenever necessary.
Right. Yeah, I agree with that. I mean, this year's been crazy, and I mean personally, what I think it creates opportunities for us in the commercial real estate industry as well, because there are situations, where we're really sought after as a real professional now, where people really need our help. Or in good times. I mean, who needs a broker? Or who needs professional services because they can do it themselves? But I think times like this is where it gives us the opportunity to shine. So. You said that right, John. So thank you so much.
Can I just add that I had a phone call just the other day from a person who had made a private loan on a deal that was not a cookie cut deal. In other words, it was not a deal that a bank would loan on. It was perfectly, you could have loaned on it, but because it was a little bit more complex, they didn't talk to me. They thought they could do it themselves, and now from what I gather from this call is that she may not have the collateral that she thought she had, and it would have been a simple thing to fix if somebody was aware of the distinctions. But she's not a really wealthy person, so it's kind of sad to see that people are going to lose money just because they didn't talk to somebody who was more knowledgeable about it.
Right, that's very important. A question regarding moratoriums in effect. How long are they in effect for?
Well, it depends on which one we're talking about. It's either going to be the end of January or March 31st, or but I wouldn't. My guess is that those moratoria are going to be extended, and I mean, unless things getting much better much quickly, as has happened in 2020. Each of those moratoriums is extended for another 3 months or so. So that's what I see happening.
Thank you for that, John. Tony, any closing remarks here?
Yeah, one thing or two things that came up as we were talking here. So one of the things that John had mentioned earlier is about the venues, concert venues, museums, things like that. And he had mentioned the 15 billion, which is a carve out of the new PPP money. I was reading something that, unless I'm like off on my clarification, but I actually read that as a grant. So I don't know if that is just money carved out for those folks, or if that is a true grant where it's ultimately going to be kind of given to them, without any kind of loan repayment requirements or anything. So that might be something that's that's kind of interesting to look into. The other, and I think I forgot to mention this when I was talking about round one versus round two, are nonprofits, the 501c6s. So your commerce and those, your chambers and entities like that were not allowed to get round one money. They are now allowed to get round two money. So our audience out here may be involved with some of their local commerces. So if you are a 501c6, ultimately you now can qualify for PPP round two money.
All right.
The thing that struck me on this whole 5,600 page bill was how many lobbyists had their input on this in order to get something in. And it's just incredible.
Yeah. Certainly is. So, John, did you read the whole thing?
Oh, absolutely. And I summarized it. I can send you the summary if you want.
I'm sure our people would love to have that if you don't mind giving it. That'd be great.
You do know I'm kidding.
All right, Greg, closing remarks.
Yeah, I guess the closing remarks, and it's just echoing what John and Tony said, and probably more of what came out of their mouths and said what they said directly, was work with an expert on anything. Tony obviously knows the PPP on this, dealing with the business owners. John's very versed in real estate finance and dealing with the small businesses on their business attorney. And I focus on the commercial real estate side, biz acquisition. So definitely pick the right person to work with. And almost any time someone's going to be a yes fan and say, yeah, we can do this, we can do that. But you do run the risk working with the wrong person, them submitting items incorrectly, and something like this not being able to get your financing. If they submit it right now and get approval, well, then you're out of luck for getting some of the benefits that are going to be until you wait on February 1. So as with anything, do your homework, speak with people that are versed in the field, and look at their recommendation, look at their testimonials on LinkedIn. Make sure that you're dealing with someone that is not fly by night.
And I think you bring up a good point there, Greg. I mean, because that's actually here at CCIM what we try to do. There's two things that we really try to focus on: is the education, which we're doing and bringing today, is also the opportunity for networking. And I can tell you, everyone here on this call and the panel, and I see a lot of people that are participating and people that are just hanging around, our CCIM, chapter as well. And so, if anyone ever needs a referral, a good resource, another second opinion, we'd love to introduce you to the right folks that are experts in the fields that they are. And so, so with that, Greg or Tony, I saw you put your information on there. So thank you for that. And again, if anyone has any questions, for our panelists, for our sponsors, we're all here for you. I believe in unity, and the more we unite, the better off we're all going to be. And so, with that, we'll go ahead and close this out. And I want to thank John Baker, Tony Craig, and Greg Dill for all your time here. You guys were amazing and very generous with your time and your information. And so I want to thank you so much. And yeah, we'll see everybody soon, and have a fantastic day and Happy New Year. All right.
Happy New Year.
Thanks, Gary. Thanks, John. Thanks, Greg.
We'll see everyone. Thank you.
Happy New Year, guys.